Hey, what's up guys? Welcome back to my channel. It's Maurice Moore with More Investment Solutions. Those of you that are new, please subscribe. And everyone that's watching this video, smash the like button. I would definitely appreciate it. It helps me bring more content to you guys, and it also helps with the algorithm as well. Before we get into the video today, I just want to say, man, the stock market was lovely this week. Another thing is, I just crossed the $2,000 mark in this new portfolio. So for those of you that are new, I've been growing this portfolio for about a month and a half almost. I took it from $500 and now it's past $2,000. So we're gonna be getting into the portfolio, and I'm gonna be talking about the more investing strategy, where I deposit at least $100 every week into my portfolio, and I distribute that money buying different stocks and accumulating more shares. Let's get straight into the video. So for those of you that are not familiar, I've been using the DRIP technique. It's the dividend reinvestment plan. It's where I get paid from different companies because I own shares of that company, and I'm able to put that money right back into the stock market. And what that does, it creates a domino effect. So I invest in different shares, the stock actually pays me, and then I put that payment right back into the stock portfolio. What that does, it creates a domino effect, and my portfolio continues to grow. So that's exactly what we're going to be looking at today. Right now, my stock portfolio is sitting at $2,084.02. For the day, I'm up $67.94. For the week, I'm up $192.81. For the month, I'm up $184.45. And for the past 3 months, I'm up $215.31. For the year, I'm up $247. And for all time, I'm up $410.13. Yes, it's been a great week, so I'm in the green and money continues to build, so you know it's compounding and I'm excited about it. So let's get into the stocks that I actually have. And mind you, I use the dollar cost averaging technique as well, especially for us new investors. Understanding what the dollar cost average technique would definitely help you progress when it comes to building your portfolio long term. And I also use the DRIP technique, which I mentioned to you earlier, where a stock actually pays me that dividend and I put that dividend right back into the company. So like I said, it creates a domino effect. With this technique, you cannot lose in the stock market. You have the dollar cost average down, and then you have to drip. You're gonna build compound interest in your portfolio, and that's what's gonna continue building that healthy asset for you. So let's go ahead and get into my first stock. I have Coca Cola right now. It's selling at $46.87. My total equity of this stock is $407.88. It has an average cost of $45.91. That means I got into this stock at a pretty good price. My total return on this investment right now is only $8.34. It has a dividend yield of 3.64% and a market cap of $200 billion. To me, when I see the market cap at this size, this shows me that this company is actually a safe company to get into. So Coca-Cola is not a bad investment. It pays me a dividend and it has a strong market cap. Those are one of the biggest things that I'm actually looking for when it comes to which companies I'm going to be invested into. The next stock I have is AT&T, ticker symbol T. Right now it's selling at $31.86. I have a total equity of $359.21. This is my second largest asset that I have in my portfolio right now. The first one was Coca-Cola. So like I said, I have a total equity of $359.21. My average cost, I got in at $29.81. My total return on this investment is $23.09. Mind you, I've used the dollar cost average technique this whole time. So when the stock was going up, I wasn't buying. When the stock was going down, I was purchasing more shares, just making sure I can bring my average cost down. Because once my average cost down and it passes that number, that's when you start making money. So the technique of using the dollar cost averaging technique, it never fails you because you're gonna continue buying more shares. It doesn't matter if you lose money. It doesn't matter if the stock goes down. You continue buying more shares because history repeats itself. History says that the S&P 500 will increase about 7 to 10% annually. So with that knowledge and history repeating itself, it makes sense to just dollar cost average down and wait for your profits to happen. And then you get those dividends. So you put that right back in, next you know you're building that healthy portfolio. It's a win-win situation with my mindset. The next stock that I have is BAC, which is Bank of America. I have 2 shares of this stock. Right now it's sitting at $26.09. My total equity of this stock is at $52.18. I have an average cost of $22.96. My total return on this investment is plus $6.26. And it has a dividend yield of 3.16%. Market cap again is in $200 billion. And so this is another strong company. This is one of my favorite companies as well. It is a bank stock. A lot of people were talking about Warren Buffett getting out of some bank stocks, but honestly, his largest percentage when it comes to his stock portfolio is still the banks. So that's the reason why I'm invested in about 3 different banks. So we're gonna talk about that today. It has a dividend yield about 3.18%, and I also have 2 shares of this stock if I didn't mention that to you already. The next stock that I have is JP Morgan. I still don't have a whole share of this stock because I keep forgetting to deposit more. Right now it's selling at $102.05. I have a total equity of only $15.37. Yes, I am able to buy fractional shares, even though this portfolio is only a month and a half. I've been with Robinhood for about 2 years now, so I qualify for fractional shares. Not everybody's gonna be able to qualify for it, but you will be able to get on the waiting list once you sign up with Robinhood or if you've been with them for a while. So my total equity is at $15.37. My average cost, I got it at $88.57. So even though I don't have a full share of this stock, my total return is still $2.03. This stock has a dividend yield of about 4.02% and a great market cap of $308 billion. So like I said, anything with a billion, to me, in my mind, it's a strong company. It might be 2 billion, 3 billion, but keep this in mind. The S&P 500 won't even mess with you. You cannot be a part of the S&P 500 if you don't have at least 8 billion market cap. So you gotta understand that mindset. How do you know if this is a good investment or if it's a blue chip stock? Well, definitely look at the S&P 500. And like I said to you guys in a previous video, if you wanna just follow the index, follow the S&P 500, they have index funds specifically for that. Or you can be like me and go ahead and just invest in certain stocks. That's what I like to do, because I like to chase the S&P 500. The next stock that I have is Royal Caribbean. Right now it's selling at $55.25. I bought 6 shares of this stock. Actually, I bought 6.306 shares of this stock because I really believed in what this stock can do. You know, the fact that it's a cruise line, I was thinking in my mind, like, you know, when people start getting their lives back, people are going to want to go on cruises, you know, and just spend time with their family and just vacation. So I felt like it was going to be a good investment for myself. So right now, like I said, it's selling at $55.25. My total equity on this stock right now is $348.43. I got in at this stock at $43.10. Total return on this investment was $76.64. And it also has a great dividend yield of 7.23% and a great market cap at 11 billion. So this stock is probably one of my favorites right now. It's looking really good. The next stock that I have is Realty Income. So this is a REIT. I talk about REITs a lot, which is a real estate investment trust. And mind you, I have a lot of stocks, so we're gonna be going through these pretty fast. So I have this Realty Income is worth $55.85 right now. My total equity is $224.39 with the average cost. I got into this stock at $51.01. My total return on this investment is $19.46, and it has a dividend yield of 5.36% with a market cap of 19 billion. Like I said, I'm looking for the dividend yield. I want to know if the percentage is from 3% to 10%. I don't want to go too high because I don't believe in a company when it's too high, when the dividend yield is too high. So I try to look for something from around 3 to 10%. And so this is gonna be paying me a good dividend, and that's what it's all about. Continue to build compound interest, because one day this portfolio will take care of me and my children. The next stock that I have is Cleaving Cliffs. I got this stock actually a while ago for free for somebody. Go ahead and download in the Robinhood app. So if you guys are new and you guys are just watching the channel and you guys don't have no brokerage just yet, this is a free brokerage, no fees. Go ahead and add the link below and you guys can get yourself a free stock as well, okay? So this stock is at $5.43. Total equity on this stock is $10.86. I didn't get it at an average cost because I got it for free. Right now, like I said, my total return on this investment is $10.86. The reason why I thought I'm going to keep this stock because it actually has a dividend yield of about 5.62% and a market cap over 2 billion. So in my opinion, this stock looks pretty good for me. So I'm going to continue to keep this stock. I may buy more shares. Like I said, I like buying shares when it's in the red. If it continues being in the green, I don't think in my head that I'm going to continue to chase the mountain peak. I just go and look for another stock that I'm interested in, and then I just make my portfolio larger. That's exactly how I do it. The next stock that I have is Marathon Oil. Like I said, right now, everyone is getting back on the road. People are going to work. Traffic is looking lovely. I never thought that I would see the day where I thought traffic was going to be a beautiful sight to see. But to me, that means the economy is starting to get back in order. So when we had a lot of supply of oil and not enough demand because nobody was going anywhere, oil stocks was down. But right now, all the oil stocks are starting to go back up. So I'm looking forward to that. Right now, Marathon Oil is sitting at $6.10. I should have bought a lot more shares of this stock, but I didn't. My total equity is only $18.33. I got in at $2.61. If I would have bought 100 shares of this stock at $200, man, I would have made a killing already. So my total return on this investment is only $10.50 because, like I said, I got in at $2.61. I have 3 shares of this stock, and as well, this has a dividend yield of 3.57% with a market cap at $4 billion. So, like I said, another strong company that I'm in, and I'm excited to see what oil has to do while the market gets back into shape. My next stock that I have is Simeon Property Group. So Simeon Property Group is selling at $63.68. My total equity that I have on this stock is actually $68.77. I got in at this stock at $55.56. Total return is $8.77. And this stock has a dividend yield of 15.30%. That's a high dividend yield, but because this is a REIT stock, I don't mind it. When I talk about real estate investment trust, which is a REIT, this stock in my mind is going to be paying me rent just for holding shares of this stock. So at 15.30% dividend yield, I like that. You know, the higher the dividend yield for the REIT, the better. Why? Because the more rent you're going to get paid. So you can definitely get into real estate while you're learning your stocks. That's the beauty of the stock market. You can get into different sectors and you learn how to understand the world in different ways. You learn how to build your portfolio, because one day there's going to come a time where I want to get into my real estate bag. And with this, I'm going to be understanding a little bit more about real estate just because of the stock market. The next stock that I have is Ecuador. Ecuador right now is selling at $15.26. I have a total equity of $45.78. I got into this stock at $12.64. And my total return on this investment is $7.85. This stock has a dividend yield of 5.75% with a market cap of $50 billion. So a lot of people are thinking like, man, you know, how did he know when to buy these stocks? It's not that I knew when to buy them. Like I said earlier, it's all about the dollar cost averaging technique. I may have bought this stock at $14 and not $12.64. But once it went down a little bit, let's say it went down to $13, I bought it again. So what that does is bring down my dollar cost average. And then it went down to $12 and I brought that down to $12.64. That is how I dollar cost average. So when you do it like that, it's all up from there. So it's all profits, because when the stock goes up, it's all profits. And then when it comes down to your number, you're not really losing anything. You just continue to dollar cost average down, because what does it do? It goes up 7 to 10% annually. So that's the whole mindset of staying committed and disciplined for us long-term investors. The next stock that I have is PPL, and it's sitting at $26.92. I have a total equity of this stock at $80.76. My average cost of me getting into this stock was $25.27. The total return on this investment was $4.94. And this stock actually has a dividend yield of 6.47% with a market cap of $20 billion. Once again, another strong company with a great dividend yield. The next stock that I have is ExxonMobil. ExxonMobil right now is sitting at $46.29. My average cost on this stock is $43.51. Total equity on this stock is $46.29. I still only have 1 share of this stock. I have no idea why I only have 1 share of this stock. I think it's because of the fact that it's still in the green. Like ever since I bought it, it was still in the green. So you want to make sure when it's in the red, you want to decrease your average cost. You don't ever want to increase your average cost. So that's my mindset when it comes to this. Yes, you can buy more shares, collect the dividends, but you don't want to increase your average cost. It doesn't make any sense if you do it like that. Because let's say I did increase my average to $44 because I bought it at a higher price. And now when it does get to $43.51, I'm already losing money. So that's not where my mindset goes. I want to buy stocks when they're down. I want to buy stocks when they're low. I'm never trying to chase the mountain peak. Don't do that. That's just me. You know, you can do what you want to do, but I'm just telling you what I wouldn't do. The next stock that I have is ADDB. ADDB right now is sitting at $90.06. My total equity on this stock is $113.87. I got into this stock at $90.98. This is one of my newest stocks that I just bought, so I'm in the negative right now at $1.17. What I'm gonna do, if it keeps going down, I'm gonna continue to dollar cost average. So that's my technique that I'm using. Right now it has a dividend yield of about 5.12% with 158 billion market cap. So like I said, it's another strong company. It's been around since 2011. The next stock that I have is Alpine Global Premier Properties. This is another REIT. I usually don't buy penny stocks, and in my mind, this is a penny stock. Anything below $5 is a penny stock to me. So it's $4.50. I have a total equity of $57.67. Well, like I said, I love REITs, so I'm gonna get into them. So the total equity I have on this stock is $57.67. I have an average cost of $4.33. So my total return on this investment is $2.34. This stock has a dividend yield of about 11.24%. Like I said, a REIT is gonna have a little bit of a higher dividend yield, and it has a nice market cap. It's still a low market cap, but it's still good at 384 million. So when you see a stock like this selling only at $4.50, it might not be a large company. You know what I mean? It could mean that the company is literally going down, or it could just mean that it's not a large company, so because it only has a market cap of $304 million. It's not a strong company, but in my opinion, it's a good investment. The next stock that I have is SRET, which is Global X Super Dividend REIT. So what this is an ETF. So it's gonna follow a lot of companies that actually have to deal with real estate, and it's selling at total equity on this stock is $104.19. Total return on my investment is $7.31. This stock has a dividend yield of 16.13%. Like I said, this is another REIT, so it's gonna have a high dividend. I like REITs, so I'm gonna get into them, even if it does have a high dividend. I also have Wells Fargo. I don't think I went over this stock yet. I have Wells Fargo sitting at $28.10. I have 4.6 shares of this stock at an average cost of $24.48. Total equity on this stock is $130.04. And then it has a dividend yield of 8.44%. A really strong market cap at 114 billion. So guys, that is my stock portfolio in a whole. It's gonna continue to grow. It's gonna continue to build. Like I said, we just crossed over $2,000 today, with the goal being $10,000 in a year. So we're looking pretty good, guys. We're definitely headed in the right direction. So guys, that's all I have for you guys. If you guys have any questions, please hit the comment section down below. I definitely like to interact with you guys. Let me know what you guys think about the video. Peace.